I talk about using this particular platform, the Thinkorswim platform. See, the thing about this platform is it allows you to manage your investment as a business because of the numbers that they're giving you. They tell you what the numbers are. They give you those numbers absolutely free. They have a absolutely fantastic charting package. I mean, there's all kinds of things. You get live, real-time prices. The package that Thinkorswim actually gives to you is, I mean, if you had to go out and buy the software to do this, it'd probably cost you a couple $100 a month. And you know, years ago, and the one reason why I think this business is going to be is just, I mean, it's really, really at the right time for a lot of retail investors to learn how to do this, because a lot of these tools haven't been available except for the last couple of years. So, and Thinkorswim constantly reinvests in their platform to make it better and easier to use and to give you more information. I mean, the type of analysis that you'll see in the videos that we're going to be doing is absolutely incredible. You can't get the type of analysis, and you can't monitor your trades in a window like this in other platforms. They just don't have it. I won't knock other brokerage firms, but I did have another account at a large option, and I mean, they just specialized in options. You couldn't get these kind of numbers. You couldn't manage your business by the numbers like you can with this platform. So I have a video just on the selection, the order entry, how to get help, and how to manage your trading platform through the Thinkorswim platform. Then I go into portfolio management, and specifically portfolio management by these Greeks. Now, if you know options, then you know the Greeks. Okay. If you don't know options that well, or you haven't gotten a introduction to the Greeks yet, I go through that. And we're going to manage our portfolio. That's the whole deal. We manage the whole business. Then, when we find a problem, we dig down into each individual position to find out whether or not, in fact, we need to make adjustments to our business model. Just like a real business, we make the adjustments, things are looking good again, and we continue on the position, and at the end of the month, all we do is collect our pay. That's the whole deal. We just wait. Here, let me show you exactly what happens, because over time, the neat thing about this is that you can actually tell what your profitability is going to be over time. If we take a look down here in the left-hand corner again, you can see that, you know, as of May 6th, we're going to be up $369. You can tell exactly what your business is going to make over the next week and a half. And then on May 13th, we're going to be up almost $870. And that's exactly, I mean, that's how you manage the business, by the numbers. You know in the future what you're going to be making based on the type of portfolio and the management of the portfolio that you're doing today. That's this is what happens to this white line. This white line is your current profit and loss position, and this as we get closer to option expiration, this moves up. So on May 6th, we're going to have a profit of $374. On May 13th, we're going to have a profit of $871. And as we get closer to expiration, if we go back to the expiration graph here, we'll see that the maximum profit is, if we stay right in the center here, is about $1,000 on this margin, or $1,200 to $1,300 if we move to either side. So it's very easy. This platform is absolutely fantastic, and that's what I teach you to do. I teach you to manage your portfolio by the Greeks in less than just a few minutes a day. I said 15 minutes, but to tell you the truth, once you get used to doing this, it's going to be 5 minutes or less. Adjustments. Now, this is huge. This is the big picture here. This is the most important thing. Nobody teaches this. Absolutely nobody teaches you how to do adjustments. You know, you can learn bear call spreads. You can do bull call spreads. You can do you know, put spreads that are bearish. You can do put spreads that are bullish. You can do all kinds of different kinds of weird, you know, you can do collars, and you can do all kinds of different positions. But, and a lot of people teach that. They teach you how to put these positions on. But generally what they want you, they need you to have an opinion of the direction of the market. Well, with our system, you don't need that. This system does not require you to have an opinion of the direction of the market. So you don't have to do technical analysis. You don't have to know anything about technical analysis. If you know how to manage your business by the numbers, then that's all you really need to know. If you know how to put trades on, then like I said, these are not one-dimensional trades. These are multi-dimensional trades. They're easy to do. They're easy to adjust. But adjustments are everything, because nobody teaches you what to do if the position goes bad. I mean, you can put on a bull call spread, and if prices go up, yes, you make money, but you know what? You're not going to make the maximum amount of money until you get to expiration. I mean, if you have done any type of spread option trading before, and you've put on bull call spreads, let's say you bought a IBM $5 bull call spread, and you bought it for $2.50, and at expiration it's worth $5 because the strike prices are $5 apart. And the market in IBM has gone up, and now all of a sudden, for $2.50, all of a sudden it's worth $3.50. Then you want to be able to take that profit, but at expiration it's going to be worth $5. So you kind of hope and pray that it goes above that your short strike price, and you get that full $5 of profit spread that you put on. But then what happens? IBM turns around and goes back down. All of a sudden your spread is now worth only $2, and you paid $2.50 for it. Well, you know what? There's an adjustment to that position that can lock in your profits at $5 if you only knew how to do it. So adjustments are absolutely critical. It's very, very important for you to understand how to do adjustments in your positions. And we don't do just one-dimensional type of positions. We do multi-dimensional positions so that we profit doesn't matter whether the stocks go up or down. But adjustments is really the big picture, because nobody teaches it. They teach you how to put on these one types of positions, either spreads or calls or puts or whatever, and that's it. And if they don't work out, you take a loss. If they work out, you make a little bit of profit. But I don't think that's a great way to trade. I did that for years, and I had 50-50 success. Some months I made money, some months I didn't make money, and it's a very, very, you have to have some market direction, and if they don't work out, you get killed. And if they do work out, you make a little bit of profit, and that's not a business. That's a gamble. This is a business. We're managing our portfolio by the numbers. We know how much profit we're going to make every month. Okay, then I go into closing our positions, our profit and loss. Let's take a look at our profit and loss closing positions, and this is absolutely critical, because what we want to do is we want to close out the positions at the right time. And this is where you want to take a look at this picture again. You want to analyze your picture, because when you get to close to expiration, that white line moves all the way up here, and it's very, very close to your expiration full profit. And if your position is looking really, really good and it's in the center, you might want to hold it another day or two just to see how prices go. But in general, once you get to the point where you've got a substantial profit in these positions, you can close them out. It's not going to hurt. You still make your profit. And you know what? You don't have to be in a hurry about closing out your positions, which is nice, because you have so much room to move in price on a daily basis that it's not going to hurt you if you don't close out your position one day, or you just you got busy with something and you want to close it out, but you forgot, or you didn't get the price you wanted, or something like that. You can afford to be patient with these positions. You don't have to. It's not like day trading where every little tick counts. In this type of trading, you're putting on positions, and you don't have to settle for market prices. In fact, I don't suggest you settle for market prices. The nice thing about the thinkorswim platform is it allows you to get in at the mid prices many times. It depends on the market, of course, but you can get in the mid prices, and if you can't get in the mid prices, then you can move up your little bit by little bit. And those the money that you save from trying to get mid prices really helps pay for all the commissions that you're going to be generating.